And now to the all-important question. The title of this documentary is Debt, a Global Horror Story. Is it in fact a global horror story? And if so, what are the solutions, if there are any?
It's definitely a very, very difficult story with lots of challenges, with lots of pain, and lots of pain still to come.
As things stand, there is a horror story. You have debt that cumulatively is not financeable or repayable by the rate of growth of the global economy. The rate of the global GDP has declined from what not so long ago was 6.5% to the current level of 2.5%. At 2.5%, you cannot pay back debt or service debt as well as take care of the poor. So the horror story is not so much financial as it is socio-political. The solution to avoid that horror story is for the rich, who have essentially looted the bank, so to speak, the national bank. They've got to come to the party to avoid further horror stories evolving.
Well, you know, in South Africa, I don't believe it is a horror story yet, but I believe that unchecked, it could become a horror story. And if interest rates went up rapidly in South Africa, it would become a horror story much quicker.
It's a developed market horror story, let's be more specific, where the emerging markets are actually in a slightly better position. Should we be afraid? The answer is yes, because it can lead to war, as political establishments use war as a distraction to actually resolve debt and the consequences of that. So yes, it is, because the debts are going exponential. We know it's going to be resolved in a hyperinflation or a default disinflation or deflation manner. One just doesn't know which country is going to choose what. On balance, you can see that countries are choosing inflation as the preferred route, but whether that is what will eventually happen depends on a number of things. It's, you know, they can try inflation, but if banks run out of collateral to lodge with the central bank to get the money, you know, the printed money into the economy, if that doesn't happen, for instance, then you can actually end up in a deflation anyway. But you know, the converse of that is if you get that money in, that inflation in nitroglycerine is being packed into the basement waiting for an arsonist to come along.
I don't think the situation today is as dire. I was more scared. The subprime crisis was the scariest crisis that I've seen. But the euro crisis is, this is a question of will. I mean, there's ways of solving that if they want to, and they'll decide whether they're going to make a fiscal union and share the debt burden, or if certain countries have to go their own way. And fine, that's just not going to kill anybody.
Is there a global doomsday that's coming? I don't think so. I think that as time goes on, governments and the private sector, particularly the banking sector, are learning about how to manage these things. How do we roll out debt to have much longer maturities, so that as these structural reforms are happening and income is being collected, the governments can be able to pay their debt over a longer period, and banks have begun to accept that. Banks are beginning to accept that they have to take some haircuts from time to time, which is good. So I don't see a global doomsday scenario coming, but I think we have to learn the lessons about how to do basic arithmetic. Income, expenditure.
I think ultimately, sadly, inflation will have to come into the Western system and dissolve a lot of that debt away, which means that the savings of people in the West will be severely impacted as a result. and lifestyles will be impacted as well. I think this is an event which is some way ahead of us, but it's not so far ahead that you can't start taking precautions now. I think democracy in the West is rapidly becoming a case of robbing an unborn Peter to pay an aging Paul. And I think that that's the Achilles heel of democracy, the way democracy has been constructed. In fact, on the basis that we're using the earnings of future generations to pay for the consumption of the present, it's a profoundly undemocratic, even to the point of being immoral system.
The question really in Europe at the moment, and also with the European sovereign debt crisis still ongoing, is how can we get the Eurozone back to a stable and sustainable path of economic growth, and how can we actually sort of regain investor confidence. And when you look at the European problem at the moment, many investors are pricing in what is called now the convertibility risk, meaning that the Eurozone will unravel. And up until now, European policymakers went from one crisis summit to the next trying to find a solution, but it was always just a stopgap, and after a couple of days or weeks perhaps, we had markets kind of losing confidence again. So the latest now is, yes, the bond buying program. Is it going to work? The jury is still out on that.
I'm not saying you necessarily always have to pay it back, because a lot of people have debts. Governments often have debts for long, very long periods of time. The most important thing is that the quality of that debt remains a good asset, so that your debt is considered, you have the potential to pay it back 100%, then you don't necessarily have to pay it back. As soon as the quality of that debt deteriorates, then the creditor who's holding it is holding an asset which is worth less on his books than it was before. And if his assets, the value of his assets go down, something on the other side of his balance sheet has to go down as well. Now all of a sudden, if all the value of the loans are cut by 50%, that means you've lost 50% of your depositor's money. Then you have a bank run. And this causes a great, clearly, it causes a catastrophe to have a bank run. But up until that point, no one's asking you to pay it back. So confidence plays a huge role in finance, in money, in debt, in assets. And like I say, it's the quality of those assets is the most important factor.
Look, the way to pay the 46 trillion or for any given amount of debt, you can pay it in two ways, or a blend of two ways. One is to become, from a productivity point of view, robust enough to raise the sustainable level of growth in order to pay back your debt over time in a fairly orderly and least painful manner. Much the same applies to any given sovereign debt. The sovereign debt is underpinned by the rate of the growth of the underlying economy. If that economy gets into high growth, generates high tax revenues, that economy will be able to absorb and pay back the debt. However, if the economic performance stagnates, even worse, if it declines, then yes, everybody has to pay, because there is no third way.
At least to start looking at the sovereign investor as part of the solution rather than their pot to plunder, right, you may actually start to get a solution. And funny enough, the Greeks have actually started to already talk that way. In other words, should we not be cutting our tax rates and cutting our expenditures, right, so that we can start attracting investment? France is going the other way. It's exactly the worst place to be investing in. In other words, they're going to compound their problems over the next few years by raising taxes, etc. Merkel is also speaking in the same way: raise taxes, etc., to close your budget deficit. That's what was missed in our own budget this year in South Africa, is that to close the budget deficit, we'll raise taxes. In fact, and that's exactly what happened. We got a higher dividend tax and we got higher capital gains taxes, etc. And in actual fact, they missed the point of what the rating agencies are saying. Your risk is increasing not because of the budget deficit per se, that's just a symptom of the problem. It's the unsustainable trend of spending, it's that consumption as opposed to production.
Well, I think there's two possible solutions. One is the austerity route, that the people who have overborrowed now go on the diet to end all diets. So we have the financial version of the television show, The Big Loser. So you shrink yourself, but that's going to basically lead to those economies being crushed through lack of demand. And that way you save the savers and the borrowers sort of die on this sort of starvation regime of a concentration camp. The other one is the borrowers basically rather lackadaisically throw up their hands and say, well, we're not going to pay you back, we can't pay you back, and we won't pay you back, which means the losses just shifted to the savers. And so the countries like Germany, and the quote you were just citing was the Chinese, who are a very big creditor of the United States and indeed of Europe, would be absolutely devastated because their loss of wealth would be so staggering. The Chinese have 3.2 trillion US dollars in foreign exchange reserves on the table, invested in US treasuries, US dollars, European government bonds, euros, and Japanese government bonds, and in yen. And they would be wiped out.
Yeah, sure, things look bad, but we're not on the verge of a financial apocalypse just yet. It all depends on how the countries of the world address the situation and deal with the debt load. You know, I think on reflection, the bard, William Shakespeare, was a tad idealistic, let's put it that way, when he gave us the advice, neither a borrower nor a lender be. What has become clear with the parlous state of the world's finances at the moment is that we've ignored that advice. We've borrowed, we've lent, we've spent with absolutely no regard for the future. It comes down to simple arithmetic and simple common sense. Don't borrow money if you can't pay it back. Don't lend money if you can't see it getting paid back by the person that you've lent it to, or the country, or the corporate that you've lent it to, and with interest.